In yesterday class, we discussed this question in absorption costing. Now, today we will discuss in the marginal costing and also reconcile the profit of absorption and marginal costing. A company commenced on 1st March making one product only, the cost card of which is as follows. Direct labor is 5, direct material is 8, and variable production overhead is 2, and fixed production overhead is 5. Standard production cost is 20. This is full cost, that is 20. The fixed production overhead figure has been calculated on the basis of the budgeted normal output of 36,000 units per annum. The fixed production overhead actually incurred in March was 15,000. Selling, distribution, and administration expenses is fixed is 10,000. Variable is 15% of sales value. The selling price per unit is 50 and the number of units produced and sold were production is 2000, sale is 1500. Prepare the absorption costing and marginal costing statement of profit and loss for the March. For the month of March, this is the first month of the organization. So first we start workings for the marginal costing as we discussed in the performer. Okay, first of all, calculation of product cost per unit in marginal costing. You have product cost elements of direct labor. Direct labor is 5. Direct material is 8. Variable production overheads is 2. Your per unit cost is 15. This is variable product cost. This is your variable product cost. Fixed factory overhead is not the part of the product cost in marginal costing. Why? Because these are treated as period cost in marginal costing. Now we will calculate closing stock. Units. How we will calculate closing stock units? We have opening stock. Opening stock is not given in the question because this is the first year, first month of operation of the business. That's why opening stock is nil. Otherwise, one period closing becomes next period opening stock. We have no opening stock plus production, that is 2000 units, minus sales, that is 1500 units. So you have 500 units closing stock. Now we will calculate our variable product cost. Third and last working is calculation of variable cost of sales. We have no opening stock. and cost of units produced. How much units we produced? We produced 2000 units and per unit cost of is 15. So we will get 30,000. 30,000 is cost of units to be sold. Less closing stock. How much closing stock units we have? We have calculated 500 and now unit cost is 15. It becomes 7,500. Your variable cost of sale is 22,500. Variable cost of sales. Now we will make our profit and loss statement under marginal costing for the month of March. Once we have sales, we sell 1,500 units and per unit selling price is 50. Is equal to 75,000 less variable cost of sales, that is 22,500. You have calculated in working 3. So we will get 52,500. This is your gross contribution. Less variable selling and distribution cost, variable selling cost, that is 15% of sales value. What is your sales? Your sale is 75,000 into 15%. It becomes 11,250. Now I will get the figure of contribution. contribution is 41,250. Now we will less our fixed cost. Our fixed cost is fixed production. Fixed production cost, we have 15,000. Fixed non-production, fixed non-production is 10,000 per month. It's given per month. So total fixed cost is 25,000. You will get your profit 16,250 is your profit using marginal costing. $16,250, you have profit using marginal costing. Now we will reconcile the profit of marginal and absorption costing. Reconciliation of marginal and absorption costing. Before reconciliation, we should consider some conclusions of marginal and absorption costing. Effects on profit effects on marginal absorption costing if opening stock units is equals to closing stock units your marginal costing profit is equals to absorption costing. Your marginal costing profit equals to marginal absorption costing. It means both profit techniques shows the same profit if opening closing stock units and closing stock units are same. What it means? It means if you have opening stock units of 500, you also have closing stock units of 500. I am discussing about the units. Okay, keep in mind, not the cost. Okay. Or if we said production equals to the sales, what this situation is known as, what this case is known as, production is equals to sales. is first. In second case, if opening stock units are more than closing stock units, then your marginal costing profit is more than absorption costing profit. Absorption costing shows less profit and marginal costing shows more profit. What it means, opening stock units is more, it means your sale is more than your production. Okay. Production is less than sales. Third and last case is if opening stock units is less than closing stock units, or in other words, closing stock is more than opening stock, then absorption costing profit is more than marginal costing. What it means? It means production is more than sales. Production is more than sales. Now, how we will reconcile the profit of marginal and absorption costing? If one costing profit is given in the question, you can calculate the second costing profit in using reconciliation of profit. We will start from the profit using absorption costing, difference in profit, then profit using marginal costing. How we will calculate difference in stock or the difference in profit? We will calculate opening stock units again, we have to take the units minus closing stock units multiply by fixed OER. Fixed OER. In this question, if I have, as I calculated the marginal costing profit of 16,250, I will put this 16,250. I want to calculate the profit using absorption costing. Opening stock unit is nil. You have 500 units in closing stock and your absorption rate is 5 per unit. $1,500, or sorry, 2,500. You will get 2,500 negative. It means your opening stock is more than your closing stock. Sorry, your closing stock is more than your opening stock, and your absorption costing profit is higher than marginal costing. I will put this difference in profit figure here. This is negative. When I will move backward, it will add in 16,250 plus 2,500. You will get 18,750. This is your profit using absorption costing. Clear? This is all about marginal and absorption costing.